Hi there, welcome to Kneppy Invest. The other day I released a video on the definition of a REIT. What is a REIT? Also went through the history of a REIT. They've only been around for 60 years, started in the United States in 1960. The first REIT popped up in Australia in 1970. They weren't called REITs before 2008, but the Australia, or the ASX, is the second largest REIT market in the world after the United States. So this is a big sector on the ASX. So I thought about 6 months ago, it was a good idea to start looking into this space. Because 6 months ago, when I first started researching REITs, this was in August 2022, I did notice that most REITs at that point in time were trading at a discount to the net tangible assets, the NTA. But even though they were trading at a discount to NTA 6 months ago, and some might argue that might mean they are cheap, most of the share prices and the valuations of REITs have gone down since then, and there is a reason behind that. So I thought it would be a good idea to understand REITs for a possible future investment. But I went through my research. I realized there was a lot of terminology that was unique to REIT. So you have to understand this terminology that is unique to this space. And that's what I'm going to do in today's video. When I first started researching REITs back in August 2022, it was quite convenient because that was around the time most companies and most REITs were reporting their financial year 22 numbers. So all I had to do was go through their financial reports. And when I started going through REIT's financial reports, I realized there was a lot of terminology I wasn't quite used to. And the very first REIT I did look at, because they released the very first REIT financial report, was one called Dexus Convenience Retail. Now, the good thing about REITs is they are fairly concentrated, and you can tell what sort of real estate they're into just by the name. So convenience retail has to do with petrol stations and stuff like that, particularly petrol stations on the side of major highways. And this is the summary results for Dexus Convenience Retail. And they spend a lot of time and effort with a term called FFO. So they have property FFO cents per security, also have a FFO payout ratio. A couple of other terms I might be a little bit used to, particularly NTA per security. I know what NTA is, net tangible assets, but they also have a distributions. And when I did see this for Dexus Convenience Retail, I assumed at that point that distributions was very similar to dividends. But we'll talk about these definitions of these terms later in the video. So there's quite a few unique terminology to REITs when I looked at a lot of these REITs financial reports. And there was also one other unique terminology that I found throughout these financial reports from REITs, and that bit of terminology was something called whale. And most REITs do have some sort of whale number, and that number is in years. For Dexus Convenience Retail, their whale is 10.2 years. And this was just one slide in their half-year presentation. And it's quite obvious just by looking at this particular slide in their presentation that whale has something to do with lease expiry. And the majority of their leases expire after 2030. But I'll talk about the definition of whale later in the video as well. Now, as I went through more and more REITs, it was quite obvious that these bits of terminology, FFO per unit, distribution per unit, NTA per unit. I didn't mention gearing in the Dexus Convenience Retail, but gearing is very important for REITs as well. And also whale is quite important. So this is Centuria Industrial REIT, CIP, and I will be doing a Kneppy's analysis video on this company, and that's the reason I have included this particular slide. But when you look at the half-year financial results for Centuria Industrial REIT, they use these same bits of terminology as well. FFO per unit, NTA, and also whale. So these are the sort of terminology you have to understand if you are thinking about investing in REITs. Another interesting thing I noticed when I looked at some of the REITs presentations for the half-year results, and in many of their presentations, they also had an Outlook section. And when you look at the outlook section, most of the REITs concentrated on two things. And this is Scentre Group's outlook for the rest of the financial year 23. And the reason I'm using Scentre Group here is because if you ignore and don't consider Goodman Group to be a REIT, in my opinion, it's not a true REIT, then Scentre Group is the largest REIT on the ASX. And if you look at Scentre Group's outlook for the rest of financial year 23, they only mention two things in their outlook, and that's the FFO and the distribution. So obviously, these are the most important things to focus on when you're looking at the outlook for a REIT. Now onto the pieces or bits of terminology we need to understand if we are looking at REITs, focusing on the most two important bits of terminology. Now you might argue that whale is quite important as well, but it seems like just based off the summary of results for most REITs, they really focus on FFO, distribution, and then whale comes next, and then gearing comes after that as well. But FFO means funds from operation. And the way I look at this is simply, it's sort of like the free cash flow of a REIT. So the definition and the formula for FFO, or funds from operation, is you take the net income and then you take into account depreciation, amortization, capital gains from property sales, and also interest income. And then what you're left over with is a funds from operation. And funds from operation is quite important because the majority of the funds from operation get distributed back to the unit shareholders or unit holders or shareholders. Now onto the distribution. And I assume this was fairly similar to a dividend, and that's exactly what it is. So the definition of distribution is the portion of the profits generated by the REIT, which is distributed to unit holders or investors. I've mentioned unit holders here in particular because a lot of times when you look at the NTA or FFO, they mention FFO per unit, NTA per unit. So the unit is very similar to a share. So let's go back to Dexus Convenience Retail summary, or their summary performance, whatever you want to call it. And they're really focused on FFO and also the distribution, particularly FFO. So they start off with the property FFO in millions dollars, take away the management fees, net finance costs, other expenses, and they're left over with FFO of $15.6 million in half year 23. The FFO cents per security. So in this case, they mention per security, not per unit. Some FFOs say per unit. It's 11.3 cents per share, per unit, per security. Now onto the distribution. For the half year, they're distributing of that FFO back to their unit holders 10.6 cents, which means the FFA payout ratio, which is 10.6 divided by 11.3, is 93.9%. Back in the half year 2022, they had FFO, cents per security, of 11.4, but they distributed back to their unit holders 11.5 cents. So the FFO payout ratio was actually above 100%. So usually you will see the FFO payout ratio around between about 90 to 100%, because most of the FFO, most of the profit the REIT makes gets distributed back to the unit holders or the shareholders. And the NTA per security for Dexus Convenience Retail was $3.94 at the half year. Now, NTA per security is quite important for a company. I'll talk about that in the next slide. Before I started doing research on REITs, I didn't understand what net or NTA was, which is net tangible asset, the total physical assets of a company minus all intangible assets and liabilities. But it seems like NTA, particularly NTA per unit, is quite important because a lot of investors in REITs, and I'm just surmising here, but a lot of investors in REITs probably compare the NTA per security to the current share price of the REIT. And they might get excited if they see the REIT trading at a discount to the NTA. But that could be leading to a trap, because when I first started researching REITs back 6 months ago, in August 2022, the majority of the REITs were trading at a discount to the NTA. And the way I argued, the reason why they were trading at a discount was because the market was expecting the NTA for most of these REITs was going to drop. And because the market was expecting it, they weren't willing to buy up and pay more for REITs. And that's exactly what has happened over the past 6 months. The majority of REITs have dropped their NTA. And not only that, the share price of most REITs have dropped as well. So don't get caught up in comparing the NTA per share to the current share price. It doesn't necessarily mean the REIT is cheap. There's a chance it might be cheap, but that doesn't necessarily mean it, because there might be something at play with the market expectations for the REIT market over the next 6 months to the next year. Now onto WALE. And WALE is just an acronym for weighted average lease expiry. If you do Google WALE, you probably pop up or see some references to a wrapper. I never knew there was a wrapper called WALE, but just ignore that and just go on to any sort of investing website that talks about WALE. So weighted average lease expiry. Very important, weighted is in there, because you can get an average lease expiry, but you need a weighted one there, because some of the leases for some of the REITs might be concentrated to one company, one building, and if that lease expires in the next year, you need the WALE to be weighted towards that. Or maybe the biggest lease in your portfolio doesn't expire for another 20 years. So again, it's very important that the lease expiry is weighted to take into account those very large leases you might have in your portfolio. So again, the weighted average lease expiry is just the average expiry period of all leases within a property, but it also is weighted. When I started my research in REITs back in August 2022, I started up this spreadsheet. And now this is not a complete spreadsheet. It's a lot bigger than this, because there are a plethora of REITs on the ASX, but I just wanted to compare the different REITs. Now, I'm not sure if this is a good idea, because some of the REITs, particularly industrial REITs, are more favored than, say, office REITs, because there's a lot more pessimism when it comes to office compared to industrial real estate. But I just wanted to compare the different REITs. And what I wanted to really look at and compare particularly is the share price to the net tangible asset. Then I also had a price to net tangible asset. And at this point in time, when I did this research, the majority of REITs were trading at a discount. In fact, one of these, COF, which I believe is an office REIT, I think that might be Centura Office REIT, was trading at a significant discount to the NTA, 0.68. There are a couple of REITs that were trading at a premium to the NTA, but I did have a look at the share price of those particular REITs, and the share price of those REITs have fallen a fair bit, but the majority of REITs were trading at a discount to the NTA. The other thing I wanted to look at was FFO per share, FFO multiple, which is sort of like a valuation metric, also the distribution. Also wanted to look at the yield, because the yield was quite important, because one of the reasons to invest in REITs, and it's because it's a proxy to owning your own real estate. And when you own your own real estate, the house, your unit, you want a yield back. You want some rent. And that's what the yield is. It's looking at the sort of the rent yield. And some of the rent yields or yields on these REITs were quite high. For instance, that COF, which is the Centuria Office, was at a yield of 9.7, which seems quite high. In fact, the lowest yield here was 2.2, but the majority of yields were between about 4 and about 7 or so. The other thing I looked at was WALE, and the majority of WALEs were above about 4. So I think the lowest here was 4.2. The highest was 19.8. And that one, that 19.8, that REIT with a 19.8 WALE was also trading at a premium. So maybe the market does look at WALE and focus on WALE, and if there's a really high WALE, those sort of REITs will trade at a premium, but not all of them did. For instance, CLW, which I have no idea what that is, had a WALE of 12, but was trading at a significant discount to NTA. So really interesting that at this point in time, back in August, September 2022, a lot of REITs were trading at a discount. But when I had a look at the share prices of most of these REITs, the share price had fallen. So even though they were trading at a discount 6 months ago, which you might assume means they were cheap and good value, the share price and valuation of most of these REITs have fallen, which might suggest that at that point in time, 6 months ago, most of the REITs were a value trap. That's all I have for this video on the terminology of REITs. Hopefully you have found something new in this video, because when I first started researching REITs, I had no idea about FFO, had no idea what to look at when studying a REIT. And now, hopefully, you do or have a little bit more of an understanding of what you need to know when you are researching REITs. So look at the FFO, compare the NTA to the share price, look at the whale, all those wonderful things when it comes to real estate investment trust. If you have any questions, or maybe you are a REIT expert and you'd like to add something extra to this video, I'd love to hear from you. So leave your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.